Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business, Mike and Dan take a real, uncensored deep dive into the ins and outs of running a full-time real estate investment and wholesaling business.
What's going on, everybody? Welcome to episode 30 of the Collecting Keys Real Estate Investing Podcast.
This is our dirty 30 birthday right here.
Dirty 30. We're officially out of our 20s.
Yeah.
This is where we're supposed to like start getting depressed and look around at all of our podcast friends who are having kids and are getting married. And we're trying to figure out what the hell we're doing with ourselves. Is that what 30-year-olds
the fat's not coming off the waist as easy, we're starting to wake up with, back pain.
Like real talk though, the little pains that you get, this is something I've talked about with our staff as well as all a little bit younger. I'm like, my knee hurts now, like pretty much constantly. And it started because I was hiking with my wife and we were walking down and my knee kind of started to hurt. And now it just does that. It just never went away. This was like 4 years ago.
Yeah.
And I don't
but
know
you're still
happened.
good. You're still good though, because you can at least point it to an activity. You get to a certain point where it's like, I don't know, it just hurts. It just hurts.
Yeah, I slept weird. I woke up funny, and now I'm just broken forever.
Yeah, I was talking to a guy about he was probably in his 60s. He's like, yeah, I don't sleep that great anymore. I was like, oh man, that's a bummer. I kind of, I know a lot of people are like that. He's like, well, yeah, it's like if I sleep too long, my body hurts too much, so I have to wake up. I was like, oh man, okay, we're all headed that way. So
I know, but I think it's unavoidable. I mean, and it's catch-22, right? Because if you do a lot of activity, you kind of wear your body down, and that stuff tends to happen. But if you don't do anything, your general strength is just so poor that you're going to hurt anyway. So I don't know. I've always come from the standpoint of you might as well do stuff,
do stuff while you can.
Yeah, for sure. Cause you never know when it's going to go. But so I have a new pet peeve though, Dan. Something that has come up repeatedly in different business podcasts, real estate podcasts, videos, just all this random stuff that that I consume. And it bothers me that there is this current, I don't even know if it's a current trend or I just recently noticed it, of people who have come onto some kind of success, relatively recently in their lives, like in the last couple of years. And they lead into making this introduction about who they are with, I make X amount of money, I'm worth X amount, whatever, but I don't care about the money at all.
Oh, that's a zinger. Yeah, I can see why that's a pet peeve.
And it drives me freaking crazy because, if you, A, don't lie. Yes, you do care. And B, I feel like every time that they do it, it's almost like, I don't know. It's like they're trying to be like LeBron. Like LeBron goes and does like a sick dunk, he's like, oh yeah, it's whatever. He does it all the time.
Yeah.
But like, let's be honest. You've done something great that most people in your life are trying to do. Mm-hmm. Pretend like you don't care about the wealth you've created. They're trying to do it to show humility. If anything, I think it makes them look like a giant arrogant asshole where they're like, oh, I know most people's lives are struggling, but for me, it was really simple. So I don't care.
I think there's several. Yes, this has been going on a while. But I do genuinely believe a lot of them, right? They don't care about the money. It's because once you already have it, once you've already grown and been grinding and built this awesome thing you have, you're like, well, I don't worry about money. I mean, you and I just had a conversation over lunch about your health. And like, we're like, well, what is it related to? Money.
Yeah.
I mean, you can share it,
Well, yeah. I guess for context on that, I'm getting my, I've always been a kind of a health and fitness guy. I've been getting blood tests done usually twice a year for the last 4 or 5 years, maybe not quite that long, maybe like 3 years. And back when I first started doing them, I was very focused on health and fitness. I was moonlighting as a coach. I was competing at a high level in fitness sports. I was doing all sorts of stuff.
You're fit.
And I was fit back then. I was super fit.
You ate healthy and all that.
I ate healthy. I measured everything. I took super good care of myself. And I had all sorts of problems with my my blood levels. And I think it kind of goes hand in hand. When I was doing that, I was in the process of learning to build a business, learning about entrepreneurship. I'd left my engineering job. And I was just generally stressed because I was making no money at all.
Not having, yeah, you weren't having a consistent large income or
Yeah.
consistent income in general.
Yeah, at all. I just started getting into real estate. I was spending a lot of money. I was generally in a very high stress state.
Mhm.
Fast forward to now, I work out way less. I'm about 15 pounds heavier. I don't eat nearly as good. I drink way more alcohol. Just that's just how I
Yeah,
roll. Don't
yeah,
judge me.
yeah.
And I go and I've done these tests every 6 months the last couple of years, and every time they've been progressively getting better. And this one, I would say that I am generally in probably the worst shape I've been in, and I'm eating loose
Mhm.
than I ever have. But my blood panels are the best they've ever been, to the point that everything is like perfect, right? And so
Yeah,
I'm
you're
like,
fit
what
as a
is this?
fiddle.
Yeah, I'm by all intents and purposes, I am peak health and fitness. And I was talking to the doctor about that, and he was like, "Well, is your stress level better than it has been?" I was like, "Yeah, it's awesome.
Mhm.
Business is going well. Like we're off to a stage of growth that I feel super confident about. Everything is going great." And he goes, well, "There you go." He's like,
Stress.
"Stress. It
Yeah,
all comes down to stress. And the easiest way to have very little stress in your life is to have a strong financial base,
right.
to have
Yeah,
made some money
there's
at
the
some point
old
in your life."
argument is like money doesn't create happiness. No, but it does make things a lot less stressful, a lot easier for you.
Yeah.
Right. That's why everybody's marching, wants to march. I shouldn't say everybody. A lot of folks in our circles are marching towards financial freedom because they're
Hmm.
hoping that the stress of the stress of their
Hmm.
goals. Because typically, especially if you're like a person that sets high goals, like you put a lot of stress on yourself to meet those goals.
Hmm.
And when they're financial goals, that's a really easy number to measure. And if you
Yeah.
have that in your head, you're creating stress. And if you're taking big risks where you don't have a consistent income and you're still trying to build your wealth,
Hmm.
like that is highly stressful, right?
Yeah.
I mean,
Yeah.
and so so then when you have these folks that have already hit those metrics or what we would call financial freedom, and they know they have, and they're saying, well, I don't do it for the money. It's like, yeah, maybe not anymore.
But you did at
Right,
one point,
but you did at
right?
one point,
Yeah.
and the opposite end of the spectrum is the person that's kind of in a more, like, low income status, and they're saying, "I don't care about money," and I believe in that situation, it's because they're afraid to take the risk in failing. So they
Hmm.
set their bar super low and say, "Money doesn't motivate me,"
Yeah.
and it no longer does because all their decisions are made around, "Don't fail, don't fail, don't risk, don't fail."
Yeah. Yeah. Well, I think with, especially the high income earners who start to say that, I think it's them coming to the realization that when they do start making money, that they don't have the sudden desire to start buying Lamborghinis and like
Right.
yachts and stuff.
Yeah.
And
It doesn't
first
get them
off, I would
excited.
say it's because you're not rich enough yet.
Right.
If you
Yeah,
had
yeah.
more money, it would probably mean a little bit more to
Yeah,
you. And B, I think it's because that, like, for most people, as they realize you start to grow, sure, your life gets easier when you have more money, but also it doesn't necessarily have to become your identity, and you can become
mhm,
the same person, but you just do what you like to do. And what you've always liked to do, you just have more time to do that.
yep,
But still, I like, it's the biggest pet peeve because with all those people, they can say they don't care about the money. If you went to them and said, "Okay, well, if you had $1 billion, like more money than you would ever know what to do with, would you still do what you're doing now?" Every single one of them would say no.
right,
Right. So they absolutely do care about the money. Otherwise, they would not be doing, a business like this where you're going and walking through hoarder houses.
right.
Right.
You're grinding it out, and you're dealing with
Yeah.
stuff that is not necessarily always fun. I mean,
Yeah.
the wins are fun, right? But then
Hmm.
you and I, like, at least for me, like the bar for like a high five win went from a small fee
Hmm.
to like, that's okay. 50,000 is kind of an expectation on that one. I'm not too
Hmm.
excited about it. And then that always just scales up. I mean, that's why they say like pretty wealthy folks like Richard Bronson and Jeff Bezos, like in their personal lives, they have to do things continuously more extreme because their threshold for excitement, right? When you have when you've accomplished a lot of things and you can kind of pay literally for anything,
Yeah.
whatever you want in this world. So they have to find different ways to expose themselves to their emotions, their excitement, the adrenaline,
Yeah.
because there's just you get to so many points in life where things just aren't as exciting. A
Yeah.
$7,500 wholesale fee when you're starting out is amazing because you just did something, you created something, and then as you grow your business, that's a little bit less exciting. It's still
Yeah.
good. You still need it, but it's more of an expectation
Hmm.
than it is a dream.
Yeah. No, well, that's why you have like the ultra elite, like, Elon Musk and Bezos. They're like, Richard Branson. They're like, we're going to freaking space. Like
Right?
that is
Yeah.
the most extreme thing that we can
Right.
fathom. And that's why you
Yes.
see, people on the other end of the spectrum that are very successful, but not like that crazy successful, or maybe aren't just as put together. They're more lucky. It's like NFL
Right.
player
Right.
or like big athletes. They just go on these crazy sex tirades where they're just
Tiger
cheating
Woods.
on their wife or whatever.
Yeah.
Tiger
Yeah.
Woods,
Yeah.
exactly, right?
Yeah.
They're like, I need to make my life more
Yeah.
exciting in
Right.
some way or another. So this is the way that I'm going to do it because it's the only way that I
Exactly.
know
Right.
how.
Well, I think
But
our life has been, I mean, this last week or two has been pretty exciting in our business.
yeah, we've had
You know,
a
a
lot
lot
of
of
stuff
good,
going on in
a lot of
business.
good excitement.
Mm-hmm.
Walked that, did the final blessed off the final bit of due diligence on that 6 unit, which is really
Mm-hmm.
cool. Which is what I love about this deal is it's not a large multifamily, but it is a 6 unit.
Mm-hmm.
Um, and it's on separate lots. So we've done deals like this in the past. And the thing I like about that is it just opens up more exit strategies. I
Mm-hmm.
love exit strategies. When you buy a deal and you're like, I have 3 profitable exit strategies, that's so much better than I think I'll be able to sell this for more than I bought it next year. Right. And
Yeah.
so what I mean by that is it's actually 2 triplexes built. They're side by side, proper triplexes, but they were built on separate lots right next door to each other. So it looks like one lot. I guess you could combine them if you really wanted to. But I like that because when we exit it, what we found is you typically some can get a little bit a higher price point if you're selling
Mm-hmm.
a triplex because it's just opening it up to a larger set of buyers. Like you've got more of your smaller investors that want to buy a multifamily like that. That's in great condition, by the way. So when you sell them separately, you might, make 5 or 10% more, maybe, in a crazy market, maybe more, or you can just sell the whole package as one and somebody else buys it. The other thing I love about it, which we didn't know until I walked it, was they were Section 8.
Mm-hmm.
Oh, actually, no, our dispo manager told me that, right? Which I should have presumed because you could tell kind of the tenants seemed like Section 8, not in a bad way, but you could just tell kind of that area of the town and all that sort of stuff that they're on housing vouchers. The cool thing about that is we have like 40% of upside in rents on this thing,
Mm-hmm.
right? And now you and I aren't into displacing people. Like that's
Mm-hmm.
not our thing. Like if we don't have to displace people, we don't, because we don't want to come in and gentrify this complex and kick all these people out who are getting a reasonable rate on their rent right now. They obviously don't. Moving for them would be an expense that would be difficult. That we'd be creating chaos in their life. Um, so with that though, they're all long-standing tenants. In Section 8, people are there's two like groups of people. Some people love it, and some people are like, oh, I don't rent to that type of tenant. And it's like, why? Right? They're usually not bad tenants. You have to screen them just like you screen anybody else,
Mm-hmm.
right? Just like you would. And if you're not doing your due diligence, then that's on you as far as your tenant screening goes.
Yeah. Right.
But some of these tenants have been there. I think the least time one tenant's been there is like 4 years. Like that's the
Mm-hmm.
lowest. They're up to 20 years. So they're long-standing tenants. The units are in pretty good condition. Sure, they need carpet and paint in some of them because you've got a tenant that's lived there for 20 years, right? And never had any upgrades done. But also when I talk about 40% of upside in rents, we can typically go work with the local housing authority and say, hey, these units are rented way below market. We want to work with you and the tenant. We're not trying to displace anybody, but we need to increase our rents to at least be at market, close to market value or whatever. And they're usually pretty open to that. And the tenant typically on Section 8 has a portion that they do have to pay out of the pocket, but you can always work through that if you're actually open and communicating with the housing authority and the tenant. That's just kind of why two of the major reasons I love
Yeah.
that whole project.
Yeah, and you're protected, and I think that the negative view of Section 8 tenants is kind of antiquated
Mhm.
because I feel like way back when the kind of people that got Section 8 were people that generally just didn't take care of themselves.
Right.
But now with the way that the world has grown, the economy has grown, things have just gotten more expensive in life.
Mhm.
Now there's a lot more people that are really good people. They are just in a low income category. I mean, sure,
Yeah.
maybe partly by their own fault, but a lot of them, it's just because they've been doing their thing for the last 20 years. And
Mhm.
that thing has now like led to society sort of surpassing their financial ability.
Yeah. Yeah, and we
Right.
all
So
know
they
there's
have
a
to
good
see.
conversation that
Yeah.
during inflationary times, like, and I see it every day, is like wages don't grow necessarily with the economy all the time. And so
Mhm.
you see more and more people, to your point, which they have their thing. This is what their employment is. And at one point in time, it was great employment and helped them survive and thrive. And now that is no longer needed. And so
Mhm.
that they are considered a lower skill person. And so that they aren't keeping up with inflationary rents and all that sort of stuff. But it's not
Mhm.
because they're bad people. Like you
Yeah.
said, things grew around them. And yeah, guys like you and me would not let that happen to us
Mhm.
because we have a different mindset, but that's just not everybody else in the world.
Yeah, for exactly, and especially in this situation, from what you were saying, you walked it. Sounds like a lot of foreign people that have
Yeah.
maybe immigrated here.
Hmm.
So they probably don't have much of a skill set or an education in general. They're probably connected with something
Or,
through
or,
the
or they're
city
like
that
super highly educated with PhDs and people just won't hire them for some
people.
stupid, some dumb reason, like doctors and shit. Like, no,
Yeah,
that's not going to work for us here.
I know. So
Yeah.
there's a doctor, but they're from Nigeria, and because we're in Spokane, they just don't like
The
the
government
name.
wants like a hundred
Yeah.
thousand dollars to relicense them here, and they're like, "Well, if that's not going to work, pal,"
Oh my god,
or
why is
something
that?
dumb like that.
Why is that so true? Why is that
Yeah,
always exactly how it
I don't
is?
know. I
But
don't
I don't
know.
know. Yeah, so I think that'll be a great project. I'm super
Yeah,
excited about it.
yeah,
And
it'll
then I
be
mean, yeah,
good.
we have some interesting ones right now too with that, and then some of the other purchases that we're doing. I mean, we've been navigating a few tricky transactions just with like probate
Hmm.
situations, working with lawyers. Um, we have one right now that I'm hoping that we're going to get that's like a portfolio of it's two duplexes and two single families. And the way we're actually structuring it is a pretty high offer at base value. But essentially, what we're going to do is we're going to buy all of them and sell the single families and use the profits, even though it'll be pretty small profits from the single families because they'll be tight deals, but use the little bit of profit that's there to roll them into our duplexes and bring our cash into the duplexes down to pretty low. And then our
Yeah.
cash on cash return should be quite high.
Hmm.
So there's, getting creative with some of these transactions is just so key right now,
Yeah.
and
Well,
getting
and
creative without like
portfolio
getting into the
analysis is
weeds.
a whole nother thing, right? When you're buying a
Mhm.
portfolio, you tend to look at every individual piece of that portfolio as its own deal, and it has to
Mhm.
be bought at this price to meet our profit.
Yeah.
Well, that as a portfolio, that's not how you buy portfolios. A lot of times when you're buying portfolios, you just get stuck with some dogs and you sell those off over time or
Mhm.
immediately. But there's two other deals or three other properties in that aren't dogs for you. And those are the ones why you really bought the portfolio. Yeah, you're
Yeah.
taking some risk and you're deploying some capital in the meantime, but overall, having at least part of the pie, a piece of that pie, is better than not getting the pie at all.
Yeah. And I think you should still buy well. I don't
Sure.
think you should buy a portfolio where half the properties suck and you like
No,
are
no.
really gonna have a nightmare there. But I mean, if you're buying all of them at a little bit of a discount, even if it's not the discount you normally want for a singular property, if you can make the net of all of those come into something that you can shift into a positive discount for the properties you do like
Yep.
that's just the power of volume right there.
Right.
But I know it's going to be interesting with some of these portfolios that we have, just looking at the lending situation, because like
Right.
rates right now are getting so insane. I got quoted from a DSCR lender, which is a dollar service cost ratio. Is that what it is?
Debt
Um,
service
debt,
cost
sorry,
ratio.
debt service cost ratio. So basically, an asset based long term lender
Mhm.
that'll lend off the cash of a property. We were getting as recently as February, it's now April. So recently as February 2022, we were getting quotes in like the mid fours back before the rates started going crazy. I just got a rate quote from one of those lenders at
Oh
8%
god.
on a 30-year loan. And
That's
that's with
crazy.
points. That's with 2 points.
Oh my gosh. Yeah.
8%, dude. We like
Lending
that
is changing.
and well, and here's the fascinating thing though. And this is leading into our next topic. Um, so I got that quote. I went back to a different lender that we've worked with as well. Got a quote for about 7.25, and I was like, "This is ridiculous, dude! Like, what are
Yeah.
hard money rates looking like right now for
Right.
you?" Because
Yeah.
that's like what you see hard money rates at, and they're like, "Oh, hard money is exactly the same."
That's wild.
So I'm like,
That is wild.
what is happening right now? Why are 30-year loans the same as hard money loans at these lenders? It doesn't make any sense. And I'm
Yeah.
not really sure. Like, part of me thinks that is them speculating that the rates going up is going to be quite temporary, is going to come back down. Otherwise,
Okay.
they would have
Yeah,
changed
it wasn't
it
long
below.
ago we did start seeing rates. Like I think it was like 2018, we saw some pretty high rates, and then of
Uh-huh.
course COVID happened, and so we had to print a bunch of money and change things around. But I do think it's a reactionary effect in the immediate term. So we'll see that. We've seen that even the last decade as they've raised rates, and then things get
Yeah.
crazy for a minute, and they'll settle out. Like I'm not super concerned about it, but it's like when you're trying to buy in that time, it makes it
Mhm.
tough, right? And
Yeah.
so like it makes it hard. It makes it hard to make certain deals work. So you have to really pay attention to that.
Yeah, and I think it's just important to have different sort of funding options on the back post. Like the big thing that we use outside of the DSCR lenders for rental loans is our relationships with commercial lenders, and we
Yes.
get commercial loans, which are you know they hold into their portfolio, so it's usually pretty consistently between like
Mhm.
4 to 5%. It doesn't necessarily fluctuate with the Fed rate
Right.
so much.
Right.
But anyway, so that's leading into what we want our educational topic to be this week, which is a question that we get a lot from people in the Instant Investor program and also just from random people that hit us up on Instagram, which is how exactly do you fund the deals that you find off
Mhm.
market? Because it's a little bit different than going and getting a bank loan. So, really quick, we're going to talk about the Instant Investor program, the group coaching program that we're currently running. You can get information about at instantinvestorprogram.com. And then once we're back from that, then we will talk about how we purchase our properties. The Instant Investor program is our 12-week group coaching program, which includes a self-driven course and access to our private investor community. We will take you through the full process of how we find our leads, how we market, how we do our sales and follow-up, and how we determine the best strategy for every opportunity that comes our way. On top of that, you will also join a community of other like-minded investors nationwide that are all marching towards the same goals, and you will have direct access to Dan and myself so you can continue learning and growing with us as we continue to adapt and grow our business. So whether you're a new investor or already established, our systems can help take you to the next level. So if you think you might be a good fit, go to the instantinvestorprogram.com and schedule a call, and we can have you talking to motivated leads in as little as 2 weeks. All right. So, lending, finding money, how exactly do we close on all of our off market stuff? Typically, when it's off market, or you're buying something like from a wholesaler, or you're buying something as is from a seller, you can't go and get a normal bank loan or a normal rental loan, primarily because they want the property to be perfect and they're going to have kind of an extended timeline that you won't always have. So one of the things that we get asked a lot in our instant investor program, and also recently, I feel like a lot of people on Instagram have been asking this, is how exactly do we fund our deals? And so the main thing that we do is we use other people's money, but other people's money
OPM.
doesn't necessarily mean that we have like a rich friend that comes and funds everything for us. But we use hard money in either what I call fast hard money, which is like local hard money lenders, which will buy pretty much anything in the markets that they know. They'll help lend on that. You're always going to require a down payment for those sort of deals. Or slow hard money, which is what I call it, which is going to be a lot of the national companies well into this. They're going to require more due diligence. Maybe we're going to require an appraisal. All this sort of stuff is going to be cheaper
Yeah.
than the fast hard money. And then we do have a couple of private investors that work with us as well, which are just people that we have met over a period of time that we've been doing this business that will lend either all or part of a project, secured by a deed of trust, just like a normal lender would.
Yep.
And I mean, there's pluses and minuses to all of them, right? And I
Yep.
mean, I think that one of the biggest things to keep in mind, everyone always wants referrals and things like that. And they're like, they quoted me this much. How come they're cheaper for you? It's like, bro, because I've done like 100 deals
Yep.
in the last 2 years, like coming up
I
on
think that's
100
a
here.
I think that's a great point too, because
Yeah.
um like we didn't have that wealthy benefactor that just said, "Hey, let me loan you a bunch of money. I have a few million
Hmm.
dollars and I just like you guys, so I'm going to give you money." There are people out there like that if you know them. Yeah, leverage them for sure. But like your relationships with your lenders are growing their business, because one of
Hmm.
the first things some of these like the fix and flip lenders and the hard money lenders are looking for, and even private money lenders, is like, what's your track record? Show me, that used to, like, people used to say, show me your stack of HUDs, right? Like, what do
Hmm.
you got that I should trust? Like, what have you done that I should trust you with? Banks are doing that all the time. Your
Hmm.
hard money lenders are doing that all the time. And so a new investor that has never lended with a bank, maybe they own a primary residence, and that's it. And this is their first fix and flip. That's on their portfolio. You're going to get a higher rate.
Yep.
I mean, just guaranteed. And that's where you're talking about how come we get different rates quoted to us. It's because A, we've worked with those lenders for a longer period of time and we've made profits for them.
Mhm.
And B, like we've proven that we can do this, right?
Yep.
And more, they're salespeople at the end of the day, right? And so the more that they know that they can trust you to like do the deal properly and they're not going to waste their time, the better that you can negotiate those rates.
Yeah.
And so that's something to keep in mind. Like when you start out, like yeah, you're going to eat it, and so you're going to make less profit on the same deal we are because we have better lending relationships as an established business. But that's okay. Like it will get there. It's not like that's forever.
Yeah.
And so one of the areas that we talk about for you and me is like on when we're pulling the different levers. Like private money is awesome, especially if you have a good relationship with the person, because that's your fastest
Mhm.
deal. Sometime, and then you negotiate those rates with that private lender, whatever they want. We have different rates that we've negotiated, just like you would with any other lender. But private lenders, it's usually a conversation,
Mhm.
right? And their underwriting typically isn't the one that's going to stop you for some silly thing during the process, and they're not going to typically have crazy fees, because that's another thing to talk about sometimes. Like with the slow hard money you talk about, Mike, is sometimes we found where they try to sneak in fees.
Yeah, there's fees and there's bullshit that's involved. I
Yep.
mean, we've used these slow hard money lenders. So I guess for context, our fast hard money lenders that we'll use, they can close deal within a week. They typically require 10 to 15% down, and we're usually 11 to 12% interest only on the loan, and then 2 to 4 points, just kind of depending on it. But no BS. They want like photos of the property. We have a relationship with them now that I can just text the people there and say, hey, here's our deal, and they'll say, cool, send us some photos and we'll get it done. It's that simple.
Yep.
With our national hard money, it usually requires a 30-day closing at a minimum. They're going to require some kind of an appraisal or an inspection, whether that's actually setting an appraisal out there, or we did one kind of recently where they made us go there with a freaking like Zoom call
Yeah, I
and
remember
like
that.
walk around the house, and like the cell phone reception was all shitty, and the lady was like, can you like go back into that room so I can see it? I'm like, it's all the same house. It's not like there's a secret room that has bodies in it. Like what are you concerned about here?
Yeah. Yeah.
So stuff like that, which is just nonsensical. But the rates there 7 to 8% and like 1 to 2 points, so quite a bit cheaper. And then with our private lenders, we've done everywhere from like 7 to 9 points and 1 to 3 point. Sorry, 7 to 9% and one to
Yep.
3 points.
Yep.
And there will be all sorts of flexibility. But and you talk to any of these people, if they don't know you, you don't have a good track record, you will be more expensive than all of
Hmm.
these numbers. And this is somewhere that I find a lot of new investors get stuck, and I think it's because they don't have an abundance mindset yet. So they're thinking, I'm only ever going to do like a couple deals, or I worked so hard to find this one deal,
Yep.
I need to squeeze everything that I can out of it. So they shop around all these lenders, they waste a bunch of people's time,
Hmm.
and they end up maybe even not closing on a deal because they are going to have to pay like $2,500 more than they were hoping.
Right.
And at the end of the day, you're better off just to pull the trigger, pay the extra points, start establishing the relationship, and show those lenders that you're going to do a kick-ass job on this project. And then
Hmm.
you know what? It doesn't even take that many. If you do it like 3 times,
Yep.
and they recognize you, they know who you are, they're gonna write you checks left and right.
Absolutely.
They're
Yeah,
not
they're
even
gonna
gonna think
they're gonna
about
love you because you're making them money too,
it.
right?
Yeah.
If everybody wins, like then everybody will be a lot easier to work with over a period of
Hmm.
time. And like I've done that too, where people have asked me if I want to lend on their deals, and I'm like, yeah, sure, let me take a look at it. And I'm like,
Hmm.
okay, well, you've never done a deal. This isn't when I underwrite it. It's like, well, that's not that great of a deal. So here's the terms, right? Like,
Hmm.
but had you sucked it up and done that one and done another one, then I'm going to be more likely to give you my money, right? And
Hmm.
lend that to you for that project because I have confidence that at the end of the day, my money's coming back to me. And that's what
Hmm.
everybody's worried about in the lending space is when and how is my money coming back to me?
Yep. Yep. And also too with these people, if things change as you're going through the process, they don't like your deal, they want you to do some stuff that's kind of different in regards of, the amount of money they want you to put down or the information you want to provide. Don't get butthurt about that, because I
Yeah.
guarantee you it's not the person who you're talking to's decision. It's their
Right.
underwriter, and it's just the
Yeah.
sales guy. You're just shooting the messenger if you're being a
Right.
dick.
Yeah,
You know, and
exactly.
and it's funny, and you hear this all the time. Even when I worked in sales, we get that people will get pissed off at me because I would be like, "Hey, we're gonna have to be like 15% down. I know I said 10, but the underwriter doesn't like it because of XYZ." They get all pissed off, and it's like I don't know what to tell you. Like
Yeah.
all you, just so you know, by you being a dick, I'm not making any money
Right.
by having this conversation with you, and B, it's out of my hand, and C, next time you come back, you know what? I'm not going to want to work with you and go
Right.
through this again.
Yeah, exactly. Exactly.
So, and I think it's kind of the definition of people stepping over dollars to pick up pennies.
Hmm.
And when you're doing a lot of volume, I think those little details matter a lot, because let's say you're doing 30 deals in a year, right? And you're paying, an extra an extra $2,000 per loan, that's 60 grand,
Yeah.
right? That's a lot of money that you're taking out of your
Hmm.
pocket. But if you're only doing a couple deals and you're missing out on, I don't know, $3,000 to $8,000, the alternative is
Yeah.
you're probably not going to just going to have less opportunities in general, and you're never going to build that relationship over the long term.
Yeah. Yeah. Exactly.
So,
And I think the key too is as you get into this, and if you want to like do multiple deals, find those different levers, and you have to
mhm,
be proactive finding your funding levers, because like when we started, what did we have? We had hard money, right? I think
yep,
that's what we had, like one lever. And then of course, when we would burr properties, we'd go to our local credit union, do all that sort of stuff. And we
mhm,
actually locally have multiple lenders that are, credit union lenders for our burrs as well now. But it's like, then we added a private lender.
mhm,
Then we added another hard money lender, which is the slow hard money. And the terms are a little bit better. And we've worked with them. And well, we worked with all of them, and the terms have gotten even better. Right. And
mhm,
so what we know though is when we have different deals in the pipeline, which lever we're going to pull,
mhm,
right? And that's important because then you don't think about it and you don't miss out on opportunities because you haven't done the due diligence to line up your funding. Are you going to get all those levers all at once and be happy with all of them? Probably not. But you definitely should start engaging those sales folks within those banks or those hard money lenders or those private lenders that and just start talking about it and engaging with
mhm,
them and understanding what those terms would look like for you specifically, so that when you do have a deal, you can underwrite your own deal with those terms accordingly.
yep, yeah, and I think one final note as well with these kind of lenders, when you're doing a business loan like this, a hard money loan, it's not like getting a bank loan where you're buying a house, where they're just going off of whatever their bank is running off of Fannie Freddie rates. When it's a hard money loan, they are negotiable, right? And that's something to really keep in mind as you're going through this process with people. Especially the first quote that they give you is probably more expensive than they're actually willing to go,
Right.
if you show that you're organized and that you know what you're doing, right?
Totally,
So
that
like,
helps.
because you call them, people all the time call each other and say, hey, what are your rates? And they're like 11 and 3. I'm like, well, that's expensive. And they're like, yep, sorry, that's where we're at. If
Mhm.
you come back to them and say, okay, 11 and 3, well, here's the deal. Here's my purchase price. Here's what I'm planning to do with it. Here's what I think my ARV is. Here's some photos. We have people lined up ready to do the work. Do you think we have any room on that?
Mhm.
I really, really bet that you can get a cheaper rate, or you can get some leniency somewhere along the way, whether that's in down payment size, interest rate points, just like general costs, timeline, even
Yeah,
all those things. It is like it's a business negotiation. It's a business
yep.
transaction. And as a
Well, and one
result,
thing you said
you
in
end up
that though
learning
that's
things.
really important is being on top of your shit,
Hmm.
because nobody wants to waste their time with you. And we do this with our closing companies, our title
Yep.
companies, and with our lenders. Like if they ask you for something, like I'm on it immediately, right? I don't wait 24, 48 hours to return. It's like I want to make your job as easy as possible so that you enjoy working with me. It
Yep.
works with all your lenders, it works with your title companies, it works with other investors. Like if you're on it, people enjoy that interaction more and they're more likely to work with you and give you better terms.
Hmm. Yeah, absolutely. So, um, well, in that way, how do you determine whether you have a good deal or not, Dan?
Ugh, I say I say if it's a piece of shit or not.
I was gonna say, well,
Yeah.
we have a way that we're
Yeah.
gonna be releasing here very shortly.
Yes, we
We
do.
ha-
We
we
do.
do. So we put together a freebie for people that you can go and download now. It is our deal calculator that we use to run analysis on all of our deals.
Mm.
And if you go to collectingkeys.com, collectingkeyspodcast.com/calculator, put in your email there, and we will send you the deal calculator, and it will give you the like literal step-by-step process of how we run our ARVs. We turn our ARVs, we're running our comps. It has ways that we determine all of our renovation costs,
Mhm.
how we determine our offers, whether we're going to flip the property or wholesale it or whatever. And it's literally the tool that we use every single day to run all of our
Yep.
stuff. And it can be yours for free. It'll come with a little webinar that teaches you sort of how to use it and how we go through our analysis process. And that way, what you can actually do, which is going to be awesome, so you can take this calculator, you can take it to your hard money lenders and say, here you go. Here's what I'm seeing with this deal.
Yep.
These are my numbers. What do you think?
Yep.
And they're going to be a lot more enthusiastic about whatever loan you're bringing them.
Yeah. It's step by step, and it's exactly literally once we started using that calculator in our business, and we were able to just to give it to our employees who are using it. So like, you don't have to be brainiac to use it. It's like so simple, and you can adjust things as far as like repair costs in it to make it more local to your market if you want to. But we have, I think we're leaving our repair costs in there that we use. I can't remember.
Yeah.
We're leaving those in. And those are general budget items. They're not exact, but they'll get you in the ballpark when you're trying to make offers on these properties. And you're right. Those are the exact things your hard money lenders and private money lenders are looking for.
Yep. And if you can give all that detail, you can literally run that spreadsheet for the deal, save it as a PDF, send it over to your hard money lender. They're going to be cool. I know exactly what we're dealing with here. And I promise you'll be able to get better rates. So collectingkeyspodcast.com/calculator. And you can go and you can grab that that download and check out that webinar. And then besides that, good stuff, Dan. I know we got some, the money key is super important here. So, all right, guys. So about time for us to get out of here. You can follow us on Instagram. You can follow the podcast at Collecting Keys Podcast. You can follow me at Mike_invest. You can follow Dan at InvestorMan Dan. You should go and check out our group coaching program, which is at instantinvestorprogram.com. Go ahead and schedule a call with me or Dan on there to see if you'll be a good fit. We are looking for people. I guess right now we have quite a few like Southeast, quite a few in the Northwest. Anyone that's in like the Midwest or the South or like Southwest would be awesome. Get some more geographic diversity in there.
Yes.
But instantinvestorprogram.com, check that out. And then besides that, anything else from you, Dan?
Nothing for me. I will say that if you go to Instagram, make sure you follow me because I've already challenged Mike to a weightlifting competition, which he has deferred and declined for many years. So now I'm going to have to beat him on Instagram. So go give me a follow. Let me get ahead of him in the followers here. So we got to have some competition.
Yeah. When one of us gets to 1,000 followers on Instagram, we will have a weightlifting competition and we will stream that. So it doesn't matter which one of us it is first. First time one of us gets to 1,000, we're gonna have that weightlifting competition.
It's a race.
It's a race. Yeah, it's a race where everyone wins, especially me when I smash it.
Other than that, signing off. If you have a Section 8 voucher, come to me. I'll rent to you. I like it.
Dan looking for all Section 8 vouchers right now.
I like it. I want that government check.
In fact, if you want the government check, how about this? We'll buy your house. You can stay there and get Section 8. Live for free. That's the new house hack. Sell to us and get Section 8 for yourself.
Yep, do it.
So, perfect. All right. Thanks, everybody.
All right, see you.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.